All right, welcome back to Adulting Stars here. So you've made it to our module on credit and credit cards. Today we're talking about a word that's either super confusing, kind of scary, or both, and that's credit. If the word credit makes you think of boring bank jargon or your parents stressing about bills, do not worry. We're going to break it all the way down, real world style, as we like to do here at Adulting Stars here. So let's get into it, starting with the basics. I like to think of credit, or your credit score really, kind of as an expression of your financial reputation as it pertains to debt, and answer kind of really just one main question. And that question is, what is your reputation with managing loans and debt? Now, your credit score is that answer. It's how lenders like banks or credit card companies decide whether they can trust you to pay them back. And just like a reputation in real life, your credit gets built over time based on your choices. Now, credit shows up in more places than you might think. It's tied to credit cards, of course, but also to student loans, to car payments, to rent applications, potentially utility bills, and even getting financing for a phone. So your credit profile can really or literally impact where you live, what car you drive, and how much you pay for insurance. In short, credit matters, especially here in the US. So how does credit actually work? Well, when you borrow money, whether it's swiping a credit card or taking out a loan, you're making a promise. I'll pay this back on time and with interest if necessary. Every time you do that successfully, your credit history gets stronger. If you miss payments or rack up debt without paying it off, that history starts to look, honestly, pretty sketchy. And companies track all of that with something called a credit report, now, which is basically your financial report card. So let's look at what happens at both ends of the credit spectrum. First, if you have bad credit score means lenders will see you as a higher risk. So that sentiment translates to higher interest rates, more fees, and fewer approvals. On the flip side of that, with good credit, lets lenders know you pay your debts. So that means lower interest, better deals, and usually more options. And ultimately, you save money over time due to not having to pay those higher interests. And it's kind of like VIP status in the money world with good credit, because you get access to better apartments, lower deposits, and even better job opportunities in some industries. So with bad credit, you may not even get approved for some of the most basic things. And you might be thinking right now, I'm young. Do I really need to care about credit right now? And the answer is yes, you definitely do, because credit history is built over time. And the sooner you start building a good credit history with good credit habits, the more power you'll have later on. It's one of the few areas in life where starting young gives you a ridiculously major advantage. Interest is another one of those, but we'll talk about that later. So why does credit really matter? I really want to stress this, because your credit score, which we'll break down in the next lesson, can be the difference essentially between paying $500 a month for a car versus $350 a month. And over 3 to 7 years, that money really adds up. Getting a rental approved on the spot or being denied. And even a big difference actually is getting between a 90-day 0% interest on a loan or getting hit with that 28% interest from the start. It's not just about money, it's about freedom and options. And good credit really does equal more options, which equals more control over your future. So let's wrap up this lesson with kind of a quick overview. So credit is your financial reputation. It affects way more than just credit cards, and it's tracked through your behavior over time. And so the earlier you start building good credit, the better, because good credit opens doors and bad credit can close them. So I kind of want to give you guys an action step for this lesson. So what I want you to do is think about what credit related accounts you already have. That might be a student loan, a phone payment plan, a buy now, pay later account, anything that shows up in your name. What I want you to do is make a list of what you know, and don't worry, we'll go over how to check your official credit report soon. Just get all that written down and kind of know what accounts you have right now, okay? So that's a wrap on this lesson. Next up, we will be breaking down the credit score, how it's calculated, why it moves, how it does, and what you can do to improve it, okay? So I want you to think about your credit score kind of like your money GPA, and we want to make an A+ on it. So I see you in the next lesson. Thanks so much for watching Adulting Starts here, and take care. Have a great one.